Audio check. Audio check. Audio check. Audio check. I was dumb. It's been working this whole time. Hmm. 5 minutes. It actually traded pretty good today. A lot better than I would have expected. The lunch macro ended up playing out pretty nicely. This being the buy side for the lunch macro. 12:30 is here. Offers a discount and then runs it. Next session wasn't too bad either. Yesterday's move up to the buy side here ended up playing out really nicely. I went long right here, took a very small profit right here whenever I saw that this wasn't going to go. And then shortly after that, I actually deleted the levels, which is unfortunate, but in the video prior to this one, you can look, and I have, what's today? This day is Tuesday, so I have Monday's first hour's opening range projections. One of those levels lines up right here, the next one somewhere down here, and then the event horizon, the midpoint of those two, is right here. Right about where my horizontal line is setting. So that formed low of day here. And then it ran out the highs, and then the mid gap closure that I was watching, this yellow dotted line, formed the high of day. So that's really nice. So now we're here. ES has a little bit of sell side here on the daily chart. NQ has taken both of these lows. So there's bullish S&T on ES. It could take this low. There's no way to know what's going to happen at 2. So just wait and see. I want to be leaning long because they have left lots and lots of buy side liquidity above the market. Yesterday, they ended up taking these internal highs. Then they took these internal highs here and then left this high, and this high, and then these. So I certainly want to be leaning long. It's obviously this really clean buy side right here. And they've been generating bearish sentiment. I think they're going to run out buy side. So, go ahead. These inversions. They could be used, but I just want to keep the chart clean. Very small new day opening gap today. It's very small. I looked at it earlier. It's inside of yesterday's first presented. And this is today's first presented. 30 seconds till FOMC. We're going to miss that first opening volatility because I'm going to draw this out. Balance. This is the first presented fair value gap. Wednesday, 7/29. And because these are overlapping, I'm going to get rid of this one to keep it clean. There we go. So there's 2 o'clock. There's that big spike. Want to be really patient. Surprisingly clean price action leading up to FOMC. This was really the only instance of high resistance, but it was just forming buy side for lunch macro, and that ran really nicely. Really interested to see what they do with this Judas swing. They're not going to leave these lows here. I would say this is like really high odds that this is a Judas and they're going to, at bare minimum, come down for these. But FOMC is it's crazy. They justify FOMC to do whatever they want. They can go to both extremes of the market, lows and highs, if they so please. So it's really just about waiting to see what they decide to do with it. Look at E. Oh, interesting. ES took those out with the wick, but only the wick. I still expect it to come back down here. Regular trading hours. You can see it really easy. It left the upper half of it unfilled, left it open. That's another reason to draw higher. These highs here, this buy side liquidity pool is really clean. Plus, there's this gap that still needs to be filled in. Buy side here, gap. It's last Thursday's regular trading hours, new day opening gap. Buy side here. It's just so many reasons to head higher. It draws a line or a path, or you can think of it like dominoes. If dominoes were set up along this path here, I think of it like once it knocks one of them out, it'll just create a domino effect or snowball effect, and it will just start running for all of it. Um, Anytime I have seen or experienced massive moves and I was able to call it, it's whenever I saw a lot of stacked liquidity or inefficiencies like this. Um, and then it leads all the way down to your current position and price. New week opening gap will be really interesting to see what we do at the new week gap. To electronic. To the high of how, let's see here. Okay, so we don't have a daily body closing below the midpoint of this inefficiency. Yesterday reached all the way down to the low and passed it and then closed way above it. That's a sign of bullishness. Whereas over here, we had the body closing below that midpoint, offered a premium into this inefficiency, and it tanked. I think it would be really nice if it left these highs here. Um, for now, I want to move the text maybe to the center so that I can see. I don't know how I want to have this. I just want to be able to read the text here in yellow. We'll just do that. I know what this is, but if I ever review this in the future, I want to be able to know exactly what it is easily. But I would like, it would be nice if these highs were left intact. It kind of accumulate here, maybe form a bull flag, right? A retail bull flag. And then run those traders out, run these lows out. Um, and then I might like to look for some sort of reversal. The bodies are stopping at the high of this daily fair value gap. People trying to trade FOMC too early usually always end up getting hurt. It's been pretty lackluster so far. It really just kind of spiked up right here, and now we've been accumulating. So, but I expect some craziness. They could be deferring it. The press conference starts at 2:30. I believe there's usually a two-stage delivery. So it'll deliver one side, and then around 2:30, it'll deliver the other side. And then the real move would happen after that. I believe that's usually how it goes. I'm not extremely experienced in trading FOMC. I'm not necessarily even going to take a trade today, but I wanted to watch the price action. I'm really shocked, honestly, with how clean the delivery was today before FOMC. This was high resistance right here. I was expecting price action to look like this in the morning and then leading up to this time. But actually, there's pretty nice delivery lower and then a really nice lunch macro higher. So that's great. How how would I anticipate clean delivery? I don't entirely know, but if I had been trading today, maybe lunch but maybe I see clean movement here, and then so now I have confidence in the lunch macro actually running its buy side. Um, if I had traded before FOMC, this is pretty clean delivery. There's no reason to even consider trading FOMC. If I would have made money uh, in the morning session or afternoon session, that's great. I could just be completely done. Used the inversion, the first presented as inversion, really nicely here. And again, it's overlapping that daily wick consequence encroachment. So a lot of really, this level has produced some nice moves right here. This is first presented for value gap of Tuesday, and it's overlapping this yellow line. That validates it here, and it heads lower. A lot of moves happening right around that level. That's interesting right there. It's probably random that that's happening. Look at that. Right at 7 during macro. Run some buy side here. Ooh, it doesn't. It actually leaves that. Interesting. Obviously ran out the buy side in here, the minor buy side. Yeah, see, I just left all that buy side here. That's why I want to be leaning bullish. They're really trying to generate a bearish sentiment, and I was gonna say I'm not buying it, but I didn't want it to sound like I was making a pun. But I'm not buying the bearish sentiment that they've created. All I see here is buy side liquidity. A lot of buy side liquidity formed. And I've said it over and over, but I'm just going to keep saying it so that if I ever go back and watch a VOD or video around this time period, but I don't watch prior videos or I don't watch multiple videos, I want as much information in the one video as possible. And I've been saying for the past week that if the market is going to go into some sort of long-term bear market, I would expect them to run up and take these highs out first because it's a triple top. It's really, really clean, and they're not going to allow retail traders to capture such a large move lower. They're going to come up and run them out first. So that's why I want to be leaning long in here. I think retail is leaning short. They see a downtrend. They see a breakdown right here, a breakout below this low. I see the buy side. I stayed up until I don't even remember now, 4 a.m., 4 or 5 a.m., playing the new Halo game, Halo Campaign Evolved, my buddy Matt, because I was expecting it released yesterday, and I was expecting high resistance in the morning because FOMC, so I thought, oh, perfect, I'll just sleep in. But it actually ended up being really clean today. This moved down, and then this moved back up for lunch macro. 10 o'clock even offered a nice continuation move. 10 o'clock is right here. It started a little early during the 950 macro, but 10 o'clock is here. Presses price higher into a premium. Then at 10:05, falls back down, breakaway gap here, right over top of the midpoint of this daily inefficiency. I think it kisses it by a tick, like right there, and then falls back down below this low pretty nicely. Then right around 10:20, we get another move down. Nice move. 10:30, swing high, move down below this low. And then the high resistance starts because it's generating the buy side for the launch macro. So that's a nice continuation. Went up to the upper quadrant of the daily for value gap right there. I really want to get better at capturing continuation moves like this. I have a tendency to be trying to get in around here in the chart, which is fine. That's fine. But there's a lot of really good moves that happen off the continuation. And I'm always really skeptical about getting in them. I need to get better at capturing those types of moves. I left this here just because I saw that it used it there, and that's pretty nice. That's this. Version fair value gap. It was used yesterday here. Touched the midpoint to the tick. Really nice. Worked it a bunch in here. 2 o'clock macro. Used the midpoint here. Took out the slow. Accumulated at that key level. Used it here as reclaimed, which is interesting. It blew through it right here, and then this next candle comes down to the midpoint and launches off of it. Uses it as inversion here again, so that's been a real key level. This is at right around 9:30 p.m., where I would expect that half-hour mark to potentially form a significant swing high. That's pretty nice. The body's respecting that, falls down. Why would it cut through it here? Because there's liquidity right here and here. So it goes up for that liquidity, accumulates at the level, uses it here. It's not using the midpoint, but it's using the high. And then the 9:30 open uses that midpoint perfectly, and the bodies close away from it, not even inside of it at all. So that's really nice. Then uses first presented as inversion and runs lower. A really, really clean delivery here. This is slowly meandering back down. This does not look bullish to me. Retail is looking at this as a breakout. Maybe now they're looking at this as a cup and handle or a bull flag. I think it's going to come back down below these lows at a bare minimum. It could. They can do anything they want with this news release. So it could come down to here. I don't know. It might not. Just speculating. But they're not just going to let retail be able to buy this and just hold it and be able to capture a significant move. They're going to run them out first, as many as possible. Five-minute candle just opened up. I'm gonna see what this 5-minute looks like. Use this inefficiency so nicely right here. 1250 right here. Ran it up. 110 is here. It's technically opened at 110. Right? Yeah. But that's right in that window that I would expect some sort of swing high to form, short-term swing high at the end of that macro. And then the half hour 130s here. This candle opened at 130. There's a swing low formed, that half hour mark. Bro, I get nothing but these bots in my chat, man, trying to sell me AI viewers or whatever. It's annoying. All right. Yeah. 230. So really, so far, it hasn't had the volatility that I would be expecting for FOMC. I have seen it in the past. The actual FOMC volatility spike is pretty lackluster. It kind of will just, I've seen it just go sideways and not do much. And then after the market closes, there's a huge spike in volatility. I've seen that happen. Like at 4 p.m., I've seen that time have a huge spike if FOMC was pretty lackluster. Um, and the trading today was really clean, a lot cleaner than I would have expected. So maybe that high resistance I was expecting to see, maybe it happens here. And then everyone thinks, oh, well, like, because there's going to be a lot of retail traders trying to trade FOMC, and if they don't actually allow it to go anywhere, they're going to get beat up by the high resistance. And then they think, well, shoot, I guess it's not going to do anything. Market closes 4 p.m., boom. And then that's when the real move happens. I've seen that happen before. Um, so it'll be interesting to see what it ends up doing. There you go. I like that it's starting to move here. I really like the idea of these lows. It's tempting for me to try to trade down to these lows. Um, but because we haven't really gotten that volatility that I've been expecting yet, I want to be patient. This would need to close below this low here. If the body closes above this low, then I'm not too interested. Just want to measure risk, uh, just to get an idea of what I'm working with here. Just hypothetically, yeah, risk is high. Risk is really high. Hypothetically, if I wanted to go short here at the stop here, that's $100 risk, and that's a pretty small stop loss. It's not a lot of room, not a lot of wiggle room. Uh, so it's very volatile. It is very volatile in here. The range is really big. It just doesn't look very big because of the overall underlying volatility. So just wanted to get an idea of the amount of risk I'm working with. Goodness. I was interested in going short here to these lows, but this candle needed to close below this low. It closed above the low. So that's telling me that this is just a sweep in liquidity, and then all the rest of these candles respected the midpoint of this wick. And now we're running buy side. I'm still interested in these lows for initial drawn liquidity. I've said multiple times, I want to be leaning long, but I think they're going to run out sell side first. All this is doing is tricking retail into going long. That's all this is doing. This is a retail bull flag. It's a quote breakout here, retest of support, right? Resistance broken becomes support. Their stops are going here, here, all this here, okay? And they are currently trapping new retail buyers above this high because this is a breakout. This is where retail will be buying and they'll be placing their stop losses down here, maybe below the little double bottom. So I still want to be leaning lower for the initial move, and then the real move I want to be leaning long up to the buy side, and then the closure of this new day opening gap, the high is going to be a key level, and then the buy side here and this daily inversion for value gap, new week opening gap. That's all. That's what I'm aiming for. But I want to see sell side taken first. Bodies are still getting stopped at the high of this daily for value gap. It'll be really interesting to see what we do at the first presented because it's inversion as well. Um, yeah, that's a key level for sure. Okay, so this candle went to yesterday's in-dog low here, failed to reach the high first presented, and then closed below the consequence encroachment and this daily wick consequence encroachment. So this is good for bearishness, that the bodies are staying below that, but we still need to wait and see, do we displace back down? I like these lows a lot. ES took them, but only with the wick. I want to see a body below these lows. Hmm. All right, so ES is engaging the liquidity pool over here, near high of day. Okay, it's taken high of day right there. All right, so there's a body closing above that midpoint, so it's not ready yet. Why might it be doing that? If it's bearish, you want it. You want the bodies to see. You want the bodies to respect that midpoint. Why might it not respect it to take buy side liquidity? There's that key level again. ES has taken, I believe, yes. ES has taken high of day already, plus this high here. So there's a bearish SMT on NQ. I do not trust this move higher. Would you look at that? That's interesting. I like the idea of using today's first presented to key off of for an entry. The reason it would go through the midpoint would be to take the buy side liquidity above the market. And it has done that. It has now taken high of day. ES has taken this high here. Let me get rid of this buy side that's already been engaged. Okay, went to the lower quadrant of yesterday's new day opening gap. We've taken a lot of buy side now. We don't have to take all of it yet. Want to see, do the bodies respect this? Okay, so body goes above that midpoint. There is liquidity here, so in my mind, that's permissible because there's the liquidity. But now I want to wait for confirmation that it is going to be weak, because this is a sign of bullishness at closing above that midpoint. But I permit it if there's buy side to be taken. I really want to be leaning for these lows still, because in my mind, this is really easy for retail to make money going along. It's really easy, and I think they'll run them out. Technically, ES did take these, So that would be bullish S&T on NQ, but it was only with the wick. So we'll see. But I want to be leaning um, for a retracement back into the range first. There's a bearish SMT on ES actually. NQ's just about to take this high here, and ES isn't even close to that. And typically, ES has been the stronger asset um, over the past couple of weeks, so that's interesting. About 250 macro. Uh, Interested to watch this Wix midpoint. It really has run up a lot, but I don't like the idea that it's just going to leave these stacked lows here. I just don't like that. Uh, okay, we are stopping at that Wix midpoint. That's interesting. Oh goodness. I want to annotate the high. So I want to see, we could sweep that, but still close below that midpoint of the wick. So I just want to be able to see where that high is resting. Body stayed below that there. Interesting. Close below the midpoint of that gap from yesterday, that new day opening gap. Took out this high, obviously. Just some T on ES. ES is not taking this high. And that's interesting to me because ES has been the stronger asset as of recent. So you would expect ES to be leading the way. But it's lagging a little bit. Be interesting to see what happens at 3 o'clock. Real interesting. I mean, I like that it has ran the buy side. I wanted to be leaning for that, certainly. I just don't trust it's going to leave these lows here. I just don't trust it. To me, it seems like it would have been really easy for retail to make money in here simply because none of these lows were taken out. Um, but I mean, my bullish bias is certainly playing out. It's very strong, but I just don't quite trust it. Um, Goodness. I think 3 o'clock will be interesting. I like that we've taken this high and that high as well. Let's see here. Get rid of that wick. I want to try to keep the chart clean. I know that buy side's been taken, so I'll get rid of that. So this inversion here I'd like to watch. It's actually a volume imbalance at the low, right? Let me double check. Oh, there isn't. What am I thinking? It's interesting. The body closed below that midpoint, went up to yesterday's midpoint of that new day opening gap. Just about 3 o'clock as well. This wick is interesting. Just gonna measure risk here, get an idea what I'm working with. Okay. Um, 3 o'clock. It's interesting to me that the bodies are respecting that midpoint. Left equal lows down here. Tipped that high. ES has another bearish S&T at this high here, very small one. Didn't leave this gap open. That's interesting. If it's bullish, it will leave gaps open. Filled that in immediately. Tipped that high. And the bodies stayed below that high. Interesting. This is starting to become tempting. Risk is pretty high though. But I do like the idea of running out these lows. I really, really do. Real interesting. That's nice. Wow. Could use this as a reclaimed bearish inversion for leg up. Preferably this is a breakaway gap here. That's a beautiful run. Let's see here. Closed above that midpoint. I would have preferred it close below it and then come up to the midpoint and reject. Big wick here. There's the lower quadrant of that new day gap from yesterday right here as well. I kind of like the idea of using this one here and then leaving this one open. It's a nice drop. 5 minute. Hmm. Back into that first presented. I want that to become an inversion if it's going to be weak, obviously. Just trying to figure out where a good entry would be. I really, really like that little Judas here taking out that high, and then this being a breakaway. Do like that idea. And that happening right at 3 o'clock as well is nice. It's 5 minutes about to close. Really interesting. I mean, it's hard to, if something's going to go quick, it's hard to find a good place to get in. You could argue it's also easy if it's going to go quick, but you don't want, a retracement to stop you out before the move happens. So the timing is important. I like that it closed below that midpoint. That's good confirmation. Immediate rebalance in the 5-minute would be right here. Midpoint of that wick is there, and then that's overlapping the inversion that's been used multiple times. My stop would be above the midpoint of this breakaway. But it's falling quick. It's going really fast. Hmm. It's tough. It's a nice run back down. I'm feeling a lot more confident in these lows. So now that this new 5-minute candle's opened, I'd like to see a retracement into this range a little bit. Dang, if this candle would have just closed below this level, I would have used this midpoint to get in. I really would have liked that. And then whenever it closed below it here, it didn't reach it, which is just a sign of weakness. So it can be challenging hopping into a move that's this aggressive if you're not anticipating it up here. Hmm. I've got the 5-minute on my other monitor. I just wanted to just have the 1-minute over here so it visually is a little cleaner. It's offering so far has offered no great like premium to hop in. It's just been immediate rebalance lower. It's been leaving gaps open, so it's very weak, which is great for my bias, but it can be hard to hop into it. I like that this new 5-minute candle is offering somewhat of a premium. We'll see how much it offers. This really should be a breakaway gap. It should not come back up to this 1-minute inefficiency. So if it was able to come up to this, I really do like that. But it could just run quick, which that would not shock me at all for it to just go really fast down to these lows. We have an immediate rebalance on the 15-minute chart where my horizontal line is resting. That's a 15-minute. Or that's not an immediate rebalance. I misspoke. That's just there's a 15-minute inefficiency, and that's the low of it. where my horizontal line is resting. So we got a reaction off that. Wouldn't surprise me at all if we ended up just using this first presented as inversion and then snapping down to these lows. That would not shock me. I want to time my entry with the 5-minute chart, preferably. Like I'm watching the 5-minute, a new 5-minute candle's forming in 50 seconds. Optimally, I'd like to be getting, if I'm going to get in short, I want to get in near the high of that candle. So I want to wait for a potential move deeper into premium. I just don't know how far in premium it's going to offer. It seems really weak not being able to reach this midpoint and all the bodies staying near the low. This inefficiency. But I'd like to see these highs tipped potentially. There's that. Okay, it's also a new 15-minute candle as well. So 15-minute immediate rebalance would be where my horizontal line is resting at 961 and a half. But it could just run from here. I just don't want to jump the entry and then it gets stopped on the Judas swing higher. Because I think any retracement up is just going to be offering a premium to go lower. And I don't want to jump the gun on my entry and then get stopped out on that run higher. So timing is important. Yeah, I could run lower there. Gosh, it's so tough. Interesting. It's tempting to hop in on a small retracement on the 5-second chart and then demand that it rips below this low very quickly. That could be all it gives. Stopped at that midpoint. Took out these little highs here. That's great. Use the midpoint of this wick. That would have been your very small 5-second retracement. And then I'd be at break even already if I had gotten in that and then just demand that it really runs away. There's a small 5-minute inefficiency that it traded into there. I'll pull it up really fast right here. That's what I was watching. I was waiting for this next candle to open, trade into that for my entry, but it's very hard to know it's not going to like fill in this whole gap. How far is it going to reach? I mean, that's beautiful what it just did here. That's great. My experience level just isn't high enough to know that it's just going to kiss that and immediately go lower. I do. I mean, I love this move. I love that I was expecting this to be a Judas and it to come back down. Um, Sometimes it can be hard to actually capture the move. It's nice. See how high the risk is as well? It's very hard. Your timing has to be impeccable. It's very challenging to time this properly. I mean, that's nice. That would have been a great entry. It's just, in order for me to feel comfortable, I want to have my stop in the breakaway gap, but that's a lot of risk. That's the problem. I could have been watching the 5 second, and I did feel pretty confident once this candle came in for a quick snap below this low, and I could be at break even above the breakaway gap here. That's probably the way I should have played it, watching that 5 second chart, being more confident. Because I said right here, tempting to get in on a 5 second retracement. And then seconds later, this happened. So maybe I just needed to be more confident right there. Because now I could be at break even here and just demand that this be a breakaway gap and it run for liquidity. Hmm. I mean, I love what I'm seeing. It's looking really good to take out these lows. Certainly these lows here. Like, I think that these lows are very high odds to be taken. And I'd love to see it just snap there really, really quickly. Just like that. Perfect. Perfect. There you go. There they are. So that's great. At this point, it's probably certainly too late to try to get in short, but I love that I called this so perfect. Um, I love it. I didn't get trapped in and I said I'm leaning long, but I did not trust this move because it was way too easy for retail to be profitable here. Offered a premium, smart money accumulation, distribution, second stage, lower, and then here's the sell side. Best case scenario, these lows. These stacked wicks here, good enough for me. Had I captured this, I may be taking profit here or taking a partial because I would be trading one contract, taking a partial with the stop loss. That's what I would want to be doing right now for management. But I would love to see this snap through these lows now. This is a beautiful run, beautiful breakaway gap, really nice. I needed to be more confident here because that's the confirmation. I mean, the body staying below this midpoint and this daily wick here, key level, the body staying below that, getting this displacement lower on the 5 second chart, this is displacement. And I said right here that it's tempting to get in short on a small 5 second retracement. My stop loss would have been up here. I have it set so that if I click short, it puts me at $100 risk. So we'll just measure what that would have been. Okay, stop would be right there. And then it automatically throws in a $200 profit, but I would have scooched this down to the liquidity that I'm targeting, right? So, and then at this point, I would be strangling it. I would be dragging the stop through here, just demanding that it run and guaranteeing profit. That's what I would be doing had I had the confidence to hop in here, and I think that's would have been the way for me to do it. Um, Waiting for confirmation, because this tells me it's weak, it's not going to offer a higher premium, and I just needed to be confident in that. But it's okay. It's completely okay that I didn't take that because risk is really high. That's a very small amount of movement for a $100 loss. Also, a very small amount of movement for a significant profit. So, what matters is that I called this perfect. I love how I called this. I love that we took these lows out. It's exactly what I wanted to see, and that this was a Judas. I said it's permissible for bodies to close above my levels if there's liquidity. And there's liquidity here, right there. Watch the horizontal line. You can see it's taking that liquidity here. Once the liquidity has sufficiently been engaged and smart money has accumulated shorts, when it's time to go lower, the levels will be respected. It will be. Blue through this inversion, didn't even come up to it, created a breakaway. I almost got in here, had this body close below, I would have gotten at that midpoint. Once it did this, I really wanted to get in here, but it did not offer that. And then this was your second stage delivery. But I just didn't have the confidence, and maybe I should have, but it's okay, again, because risk is high. What matters is that I called this, moved back down for these lows. That's what matters. I didn't get sucked in to the hype of this move up. So now I guess I'll just wait and see if this best case scenario gets taken. So, productive tape reading at bare minimum. And you know, lots of people lost money today on this move. A lot of people lost money. I'm really happy I was patient and I called it perfect. My computer just made a noise in my ear. I don't know what it was. Uh, it sounded like my trade confirmation sound, but I don't have a trade in, obviously. So that kind of psyched me out a little bit, but I don't know what that was. Come on, go take that low. I know it's going to. It's not going to leave it. What a great run. I just need to build my confidence, really. I mean, I'm calling this shit perfect. So, that's great. It was really tempting to get in on this Judas here when I saw this big move up, especially once that gap got completely closed in. That was tempting. Just needed to have a little bit of confidence. And then whenever I was uncertain how much of a premium it was going to offer here, I do think watching that 5 second and then waiting for this 1 minute confirmation, I think that would have been the way to approach trying to capture this move. Just about 3:30. See if ES took that. Hey, there you go. What did I say? ES took these lows, but only with the wick. I want to see bodies below here. That is exactly what I said earlier. And there you go. That's good enough. Took that wick low too. That's good enough. I do think Kinky will come down to here though. What clean delivery? I mean, the charts have been really clean this week. Really clean. I think I just need to trust them a little more. I'm calling it real nice. Now that FOMC is done and over with, and now that we have taken the sell side down here, the vast majority of it, we're going to come down to this low. It's meandering a little bit because ES has already done it. ES took this wick low as well. So again, I said that's good enough. Seeing ES do that, that's good enough. Even if ES hadn't done that, these lows are good enough. This is good. It's all good enough. I do still think it'll come down to here, but because FOMC is over, this has come down for sell side. Not right away, but I am feeling still very confident in higher prices because it has been leaving so much buy side liquidity. It's gonna take it. I don't think we're just gonna go into a massive bear market before they engage these highs here. This is way too clean. I think this is smart money accumulation of longs. So, sweep on the hourly, break of structure, OTE. That's interesting. I want to see that sell side taken, and then I'm going to call it for the day. I really like, I'm really happy with how I have been calling the market recently. I'm very, very happy with it. There you go. As the gamers would say, GG's. uh, just humoring my future self when I rewatch this. Yeah, GG's. All right. That will be it. I'm really, really happy with how I've been calling the market. That's really quite beautiful to see.